everybody, this is the investing teacher teaching teachers how to invest and others. I just wanted to go over a quick video on thoughts on the election and how you should actually invest with it. Some people overthink, oh, if this president is going to be president, the stock market is going to tank. Or if this president's president, everything will shoot right up. When you look at the historical data on the months before presidency and the months after a presidency, it's essentially a wash there. Democrats, Republicans, there's really no definitive data saying that one president would be better than another in terms of the stock market.
Okay, here's an article from Invesco. They're a stock market ETF producer. I actually own SPHD, which is a monthly paying ETF, and KBWI, which is a small cap REIT. The article in the description down below, you'll see a link. There's truth about presidential elections and the stock market. Essentially, these are the historical truths. Market has performed well under both parties. And don't think that one party is necessarily way better than the other. Neither party could lay claim to superior economic or financial market performance. So here you'll look at annualized returns, and you have Democrats, you have Republicans, right? Blue Democrats, red Republicans. Doesn't really show any clear winner here, right? They'll show the stock market on the y-axis and your annualized U.S. economy growth on the x-axis. Markets don't care if you approve of the president. From the inauguration of President Kennedy through Trump, some of the best returns come when the approval rating was under 50%. So over half the country disapproves the job performance of the president. Still did not influence the stock market gains. Approval rating, 165%, only showed a 5% gain. Okay, 51 to 65, only had not even 1% less. 35 to 50 had the highest gains. Now, this does happen over half the time as well. Legislation doesn't impact the economy as expected. Thinking that there might be some bill or law passed that will help will not necessarily help in the stock market. This was Patent Protection and Affordable Care Act. Care Act was signed here. Republicans win a majority of the House, and you don't see much of a gain. Tax Cut and Jobs Act. Tax cut signed here. Democrats majority of the House. Not much of a gain, right? So what really happened matters to markets. It is not guessing who's going to win the election and then betting big or waiting on the sidelines, okay? In general, investors are better off staying fully invested. You might have heard the term, it's the time in the market instead of timing the market is what matters. You do not radically re-engineer the U.S. economy. You don't want to necessarily go all in on one type of asset class because there'll be a lot of risk there. Historical narrative is not as you remember it. Again, some of the best news stories could actually make bad stock market returns. As you can see above, higher than 65% approval rating only had a 5% gain compared to 15% for a lower approval rating. And now, I'm not necessarily saying invest if the approval rating is low. It looks like there's no clear winner on that. Predictions tend to be wrong. A lot of times you might say, yes, if so-and-so wins, then the stock market will tank or increase exponentially. Very hard to predict what's going to happen in the market. Monetary policy does matter more. It should be tracking what the Fed does. The Fed possibly could have stopped the depression in the last few months because they predicted up to 30% unemployment, and we didn't get close to even around 20%. And this is not a vitriolic election. Don't confuse partisan politics with market analysis. Just because certain parties might believe in certain types of companies doing well or not, that does not necessarily mean that the market will do that.
So those of you that are thinking about investing right now or waiting until investing until November, I would recommend just dollar cost averaging the amount that you're normally putting in every month and go from there. So don't overthink waiting until November, December to actually start investing. One of the big things that my people do is they over worry. If this president is going to win, then the market's going to tank. Or this sector will do better, this sector will do worse. It might be true, but it's pretty much impossible to predict that. Defense companies like Raytheon, General Dynamics, stuff like that, they may or may not do better depending on who the president is. Some of them are already lower in the future value in their stock price because they think that defense spending might be lowered. However, we don't necessarily know that that's going to happen or not. So just take it with a grain of salt there. Keep doing what you're doing, and over the long term, it's time in the money is more important than timing the money in the market. I hope that little quick tip would help. If you have any questions or thoughts, let me know. I'm the investing teacher, and I'll see you guys next time.